we're gonna pace this one. We're gonna end this session today with the concept of the realities. All right? We asked some questions just a minute ago about how do you actually ask somebody to leave the board. I was asked to do that with a credit union that I worked with to support their facilitation of professional development. And when that actually happened and somebody wasn't put on as an incumbent, they said to me directly that this is the worst day of their life. People care. People aren't serving for this number of years because of the fact that this is just something for them to do. They passionately care. So we have to be deliberate, and we have to start getting into these habits. And so that's what we want to talk about now. We want to explore the realities. And then after this session, I know Rafael's here. He's going to come up and talk to you for a few minutes. We're going to rock and roll now, so everybody stretch if you need to, move around if you need to, because I'm going to invite Renee Sadie-White up here. She's the president of AACC, and she's going to kick us off with a panel, and I'm going to grab my panel now because I've got a few new folks here that are going to join us. I'm looking here and I'm saying, okay, realities. We've got the commitment to change, who truly made a difference. Frank from Unitas Credit Union, Community Credit Union, he's going to talk about what he's been seeing not only here but around the world. And let's see, for the first time we have Jorge here from Visa that's going to talk about what's happening with Visa and how this is happening on a larger scale. And I'm looking now for Seth. Where are you, Seth? Come on up here. And he's going to talk about the realities of making sure we're making loans and reaching out to people. So, Renee, rock.
Thank you, Sue. You guys are a good-looking bunch. I'm going to get Sue mad at me. Everybody, please stand up. Please stand up. Reach to the top. I need the energy. Reach to the top. One more time. Side. On the side. On the other side. If you can bend down. No, don't bend down. All right, that's good. Let me first say that last panel was phenomenal. And Sue, anybody who was here at this underground collision, we will give a discount for board training, for CU board training and 501c3 nonprofit training. So we'll get with you and Zach to do something with that. I think it's important. I am a DE, so I have the best panel ever. I don't think that it's any accident that Sue put me with the best men in the room. So, having said that, I'm so excited because when we had our pre-con meeting, because I'm that control freak, I want the guys to know exactly what I wanted them to do, and they all looked at me and said, we are leaders, we're going to do what we want to do. So, having said that, Frank, I'm going to ask you to start letting us know what you all do at your credit unions that makes it a diverse credit union.
We've done a number of things. I think our credit union board is really progressive. They've introduced, we've got term limits. We also have, and this has been, I know, hugely controversial, compensation. But when you're asking a young person to give up time, and they have fiduciary responsibilities as a board member as well, and you're asking them to take vacation time to go to a conference, I think it's an acknowledgement. I mean, I do have a coach bag, and I get about that at conferences all the time. But it's not a compensation that I'm driving a Tesla or anything like that. It's just an acknowledgement of the amount of time and work that board members put in. I loved the last panel. The last panel was fabulous. They had some great ideas. I know some of the things that we do is controversial. I prepared a statement, and Renee rolled her eyes, so I'm going to stay away from it. But one of the things that I think Do you want to hear it?
Sue overrules me.
Okay. Here we go, because I have it on the teleprompter.
The floor is yours.
Yeah. Our nation is becoming more diverse every year. To be certain you are fulfilling your mission to serve everyone in your community equitably, it is essential that your organization reflects this diversity. Besides that, it makes your organization stronger, better, and more nimble. When we talk about diversity, this doesn't just mean people of color. It includes LGBTQ plus people, gender, age, people with disabilities, anyone who could be excluded for a variety of reasons. Board diversity. Modeling a commitment to diversity, equity, and inclusion begins with leadership, with your board. Your board and C-suite must actively and strategically recruit and include diverse people for your board and the pipeline that leads to your board. This process to find skillful, quality, qualified people who are diverse can be hard work and a complex process. Looking at influential organizations that support people of color in your community is a great place to start looking for potential board members. Recruit them, value them, use their skills to enhance your board. Some credit unions have put a person of color on their board without proper onboarding and preparing the organization to welcome them. Those new board members can feel isolated. In many cases, their service is brief and often followed by a resignation. C-suite diversity. If you already haven't done so, now is the time to establish a pipeline to start filling C-suite positions. Like recruiting for the board, this also takes real work, a commitment to mentoring and monitoring. It is important to create situations so that your candidates are provided with educational, meaningful experiences. Ensuring their success leads to the success of the organization. Remember hearing the words, we're looking for a person with more experience. How do people get the experience if no one takes the chance with you and provides you with the experiences? Membership and staff diversity. One reason credit unions were established was to provide financial services for people who are underbanked. Communities of color are often underbanked. Yet in order to bring them into your organization, it is important to establish a trust relationship so that you can become a trusted financial partner. When a person of color comes to your credit union, consider whether they see someone that looks like and speaks like themselves. Consider whether they feel comfortable, safe, and welcomed. The same with your employees. Go beyond simply translating your website. For example, we at Unitas participate as active members of different communities, sponsoring and supporting many events central to those communities and their activities. Be authentic with the groups of people you are attracting is important. Learn their culture. Create products and services that fulfill their needs. Once you're on this road, create an ecosystem that supports diversity and inclusion beyond your credit union. Work with vendor partners that support and model DEI. Creating an equitable organization where more people have the opportunity to participate will make the work you do stronger and better. Our credit union mantra is people helping people. It's not people helping some people.
Not rolling my eyes at all. Good job, good job. So Jorge, we've talked a lot about what you do at Visa. Yes. I have one question for you. What are you most proud of that you're doing?
Well, following the teleprompter, the one thing that I'm really proud about that I've done and that we've done as an organization is, so I cover the Southeast region for community banks and credit unions. I have 1,100 customers in the 7 states of the Southeast. My proudest accomplishment is that a company as large as Visa has a guy named Jorge covering the Southeast. I don't think that that would have been a thing at some point in time. And I'm not the only one. There are 7 peers of mine that cover the rest of the region. We are 5 out of 8 female. We are 1 out of the 8 female and Black. We are 2 out of the 8 LGBT. So we cross all of the segments that the country crosses and represent Visa in the way that I think that it should be done, which is as a mimic of who our customers are and the country and the market that we cover. So that is my proudest thing. It's not something that I did, but it's something that I push every day as who I am and what I do at Visa.
Okay, thank you. Seth, tell me about what you do and why.
All right. For those of you that were at Financial Health Network Emerge just a couple weeks ago, they released their latest data. Their latest data shows that for the first time in 5 years, the average health of Americans got worse. In fact, the stat now is more than 2 out of every 3 Americans are financially unhealthy. And those are the Americans that are the members of our credit unions. Right? Not only that, but 1 in 10 of our members are credit invisible, meaning they don't have enough of a credit file to generate a credit score so you can give them traditional lending. And then let's not even talk about the fact that we have a nation full of immigrants that do not have social security numbers, that need to get lending and need to get help during life events. And yet, unless we have something that doesn't use a FICO score, we've got nothing for them. And when we talk about those unhealthy Americans, it is more disproportionate to people of color and to underbanked groups like single moms who have nothing from what they did, their credit score does not qualify them for traditional lending. And so if we know these things, and we know that Payment.com just came out and said 61% of Americans are living paycheck to paycheck, and that's independent of socioeconomic status. So it doesn't matter how much you make. It could be 6 figures, it could be 5 figures, it could be 4 figures. You're living paycheck to paycheck. And so what are we as credit unions doing to support that kind of diversity in our membership base? How are we going beyond the traditional FICO score lending to be able to make sure when somebody has a life event where they have a need, that we can actually meet that need? And not only meet that need, but meet it in the time frame when they're actually experiencing the need. And that's what I love about the panels we've heard so far today. You know, we've heard about technology and how credit unions can use technology to solve those needs. We've heard about the moral dilemma and how we as credit unions, not just what they talked about, but how are we servicing that single mom? How are we servicing immigrants? How are we servicing people that don't have qualifying credit scores, but they are actually a low risk? And just because they don't have the score doesn't mean they don't have the need. Right? How are we doing that? And then how are we practicing diversity? How are we making sure that we have products that support the people who need that the most? What are we doing for those people that are workers in the gig economy? What are we doing for that Amazon driver or distribution center worker? Right? And that's where I think the idea of going beyond traditional FICO lending, going into new ways of thinking about things. And look, one of the things that I loved is when we opened up this session today, somebody actually said Maslow's hierarchy of needs. Like, what a flashback to high school, right? But the reality is that is true, and it's just as true today. So when I sit on panels like this and when I talk to executives, the number one thing I hear is, well, we have trained our staff to give financial counseling to our members. And that's a really great step. But if that member can't put food on their table, if they can't fix their car to go to work the next day, if they can't get the medicine for their kids, they don't want to hear about your financial counseling, right? They want to hear how you're going to help them through this life event. And so I think, and that's what I get up every single day and have the privilege and honor to do, is to partner with credit unions to help them help their members get the help they need in the midst of that life event. So Renee, that's what I do.
Wow. And I believe it was Jeff who talked about Maslow. I was at that underground, my very first, and I was so impressed. I think you talked about mental health then as well, with your son. Yeah, it was phenomenal. And my session that I got to do with Linda Bodie and Monica was about belonging. And that's what this is about, diversity, equity, inclusion, belonging. I want us all to remember that diversity doesn't mean race, doesn't mean the color of my skin. It's so much more. So with that, what I heard from all three of you is being intentional. Being intentional. So at your shops, what's the first thing that comes to mind when what you guys are doing for your members? What's the first thing that comes to mind in being intentional?
I think at Unitas, what we do is we really try to reach out. We really try to be part of that community. We have advisory committees. We have people that are feeding us information that say, you're thinking of it from the wrong perspective because you're not speaking to our community. And so they give us advice as to, okay, how do we change the wording so that way we are part of the community? And one thing that I'm really proud of is Unitas does a lot of sponsoring as far as events that they do. And we are just Labor Day weekend. We did a thing called the Barbara Leonard Service Day. We had 250 people that volunteered their time with 15 nonprofit organizations. And, you know, that's reaching out to them. Don't just expect them to come to us. You know, Seth was talking about, you know, the people that 60% of the people are living paycheck to paycheck. And at our board, oftentimes I'll say, you know, 60% of the people, if they have a $400 emergency, they have to sell something. And so we got to keep that perspective constantly at the boardroom in particular as to how do we help our members, because 60% of our members are in that basket, you know. Yeah, and so I mean, we've got to find ways to. One of the big things that I don't mean to go off on a tangent. One of the big things that I was really pushing, and still am really pushing, is the Open Your Eyes, because we have 7% of the financial market. Why are we fighting as credit unions for that 7%? Why are we not fighting for that 93%? I think it's communications. I think it's education. I think one of the strongest things that we can do is educate. And being an educator, former educator, that's why I believe that. But I think that's our strength, is that we can educate people.
Okay.
So it's a little different for Visa. Obviously, we don't have members. Our members are you, the credit unions and the other FIs in the space that are our clients. So for what stands out to me, with first thing I think about intentionality in this role is we think about being a thought leader and a challenger. So in a lot of ways, we're coming into the room with resources and scale that we can bring to the forefront, but my job is not to be a vendor who pats you on the back and agrees with everything that you do. My job as your partner is to challenge you where you may not be getting it right, and to challenge each other, hopefully, when we don't get it right either. I'll give you a very specific example. It's no one in this room. I have a client in the Southeast who has never signed a contract with Visa, and they are very large. So they are getting no incentives from us. They are getting no discounts from us. They are a very profitable customer to Visa. If my job is to preserve and grow the business, I would let this person stay the way that they are. But my job is not to do that. And it's a very specific kind of challenge that we had. The challenge was sign a contract with us, and for all these reasons, you should. And the feedback I got was, you guys are doing a lot of stuff that I don't agree with in the LGBT space. I don't want to be a part of that. I don't agree with it. And so, again, in the challenge sort of conversation, it was to be, well, I have to tell you that I put politics and social values aside. That is wrong for your business. And I'll tell you why. 33% of Gen Z and 20% of millennials abandon brands that don't have values that align with them. You want to fight for the other 93%? It's my job to challenge you, not on social or moral reasons, but on business reasons. You are making a bad move. And you should sign a contract with us, and the things that we're doing in that space are all about building a business that's sustainable and also adhering to good business practices, good moral practices too. But my job as your partner is to challenge you and tell you that you are wrong.
Wow. I say wow a lot, right? Wow. So Seth, 5 years from now, what does what your organization has done look like? What have you solved?
That's a great question, Renee. Thank you. So let's talk about today so I can talk about the future. A couple years ago, there was a study done that said there are only 15 states in the entire United States that have more McDonald's than predatory lending storefronts. Let's say it another way. There are 35 states in the United States that have more predatory lending storefronts than McDonald's, right? 5 years from now, I want there to be no predatory lending storefronts because the credit union industry is meeting their members' needs. When I talk to credit union leaders and we talk about how you can use technology so that your members can get a loan from any place at any time on any device without using a biased FICO score, they go, we already do that. In fact, our program is so popular that around Christmas and Black Friday, we have lines out the door to our branch. And I go, if you've got lines in your branch, you're not doing it. Right? The people have to wait in line to get help and hope that there's somebody available when we can use technology and make that happen today to where they can do it from their car, from their home, from the store. Right? Why would you want them to wait in line? Think about your days at Disney. That's not enjoyable days, right? So why would you want your members to go to Credit Union Disney and wait in line so they can get a couple $100 loan, right? That's what QCash does. Like, we help credit unions. And so 5 years from now, I don't want there to be a predatory lending storefront because all of those members are getting the help they need at the credit union. And what's amazing is when you help those members during that life event, several things happen. Number one, they become more sticky to your credit union because you helped them when they had a need. They're not going to forget that. And their loyalty and their using of more products at your credit union is astronomical. Number two, they're going to tell their friends. And their friends are going to come and want to know why this credit union isn't just in the community, but they're making an impact in that community. And then number three, the amount of lives that you're going to change because you helped them when nobody else would. You kept them out of a path of financial destruction and brought them into the credit union onto a path of financial wellness. I know my friend Denise Wymore is in this room, and we have a saying at QCash thanks to her. And that saying is, I may not be able to change the world, but I can change one person's world. And that's what we can do in 5 years.
Thank you for that complete answer. I like that. So Frank, you gave up the 7%. So if there's 93%, how do we go for it?
Well, I think it's education. I've heard I really got involved with credit unions about 7 years ago. And the first conference I went to, they said that most of the people don't even know what a credit union is. And Sarah just said, a lot of the credit union people don't even know what a credit union is. But the thing is, you know, a lot of the general populace think that we're a labor union. You know, I mean, it's just, you know, so how do we educate them? You know, I mean, if we educate the 93, I don't want to say 93%, but the general populace, we'll have people beating down our doors, I think.
Excluding you. Seth, you said that the predatory lending, right? So what if we went after that? What would that look like? So I don't want McDonald's anymore. I want credit unions on every corner and maybe fintech credit unions. What do we do?
Yeah, honestly, you're not going to be able to do it with brick and mortar storefronts. You're going to be able to do it using technology, right? And so if you want to put them out of business and you want to be the true PFI for your members, it's embrace fintechs, right? QCash is a fintech. We are a QSO and we only partner with credit unions because we're passionate about the credit union space. But it's using that technology to reach your members where they're at. right? The idea that they have to walk into a branch to do banking. Here, I'll give you a great example. I recently moved to Tennessee, and there's a very large credit union there that I tried to open an account in. I couldn't do it online because one of my bureaus into the branch, I was there for over an hour and a half. So Chris, your example was actually really good at 45 minutes. And they wanted to pull a 3B just to allow me to give them money. And they couldn't pull the 3B because one of my bureaus was locked. They could only pull a 2B. That wasn't good enough. I couldn't give them money. I walked out, right? And so how do we make these experiences digital? How do we make sure that a member from any place, on any device, from anywhere, from any place, any device, anywhere, can get that help they need? And how do we do it in a way, because number one, we have to do it responsibly. We can't give members a loan they can't pay back, right? So we have to mitigate risk, because at the end of the day, we are nonprofit, for-profit institutions, right? We're in the business of not going out of business, is what I'm trying to say. And so there are QSOs and there are technologies that you can use to deliver that and make that happen for your members. And again, most of you, if not all of you, have mobile apps. You have banking cores, right? You've got the technology. Now it's just finding the right partner that helps you use the technology you already have to accomplish that mission.
Can I jump in? I'll just add 15 seconds of, I think payment, he's exactly right, and payment is a great way to do that. You can differentiate. There's a lot of mobile and digital technology that stands up strongly in payments. But what you're going to see, if I would challenge you all to engage in a broad money movement conversation around payments, not just a card, and how do you make that digital, but broad money movement. And what you'll see in the future, as we predict, is brands in the payment sort of transaction will fall into the background. So this is true of Visa, this is true of the brands represented in this room, that as these technologies stand up, the brands that we represent will be second thought, not primary thought. But payments is a great way, and connectivity with fintechs is a great way to play when you're in the background, as well as defend when you're in the foreground.
If I can add on something as well, you've got to work with, I think you've got to work with the people with tremendous empathy. A lot of the reasons why they go to these day lenders is because at least what I've heard is that they don't get this guilt put on them. And so I think you've got to reach them where they're at.
Okay, Seth, not you this time. It's going to be Jorge. So Jorge, you did really well with explaining to this person, this probably large credit union, that they were missing out. So I want you to tell everybody where they're missing out. What are the three things that Visa does that really helps credit union to get better?
Well, in this specific case, one of the things that he was absolutely missing out was because you were focused on this one thing that Visa also does happen to support, you were missing out on the rest of the family. On the top three, first, we have a broad community investment fund that is part of all of the initiatives that we sign with credit unions that goes either to the foundation or direct to the credit union, that you can steer into whatever you like. And Visa doesn't brand, Visa does not control. You don't even have to put the fact that Visa provided the money. You do whatever you like with it. This gentleman who is out there talking about how important his state and how important his members walked away from funding for that foundation. A second, I think very important to all of us in this space is digital transformation. We're a partner that can help play with the multiple entities that sit out there. So whether it's APIs into some of the fintechs, whether it's fintechs that we've acquired ourselves, whether it's technology that we've built or that we've co-built with a core, these are things that we can bring, and they are translated and easier to plug in rather than build yourself or acquire yourself or create a new QSO to provide yourself. So this person was also stepping away from that. And I think third, honestly, it's less to do with Visa and more to do with just the future of the business, aligning yourself with brands that align with your values and the values of the market that you're trying to serve is future-proofing your business. I would say that that's number one on the list of any CEO, and unfortunately, I'd suggest that this CEO missed it. I would be his partner to challenge him, and it will continue to challenge him in that way. He's closing the door on the only growing segment of the population, which is Gen Z, and aligning himself with the declining segments of the population.
Thank you for that. Seth, Gen Z, credit scores, do they care?
They actually do care because a lot of them don't have qualifying credit scores. A lot of the Gen Z, they don't believe in debt. And that's one of the reasons why when we talked earlier about buy now, pay later, that was a great marketing exercise in it's not debt, it's smoothing out your payments, right? Well, once you have 5 buy now, pay laters, it's debt, right? And so, the reality is they do care because they don't want to be in debt. They want to have financial freedom. And credit scores matter, but the way you build a credit score is by going into debt and paying that debt off and doing the right things. I'll give you a great example of why credit score matters. When I moved, I had to do a renovation on my house in order to be able to move into it. So I thought I was going to be really smart and use a credit card to pay for a $30,000 renovation because I wanted the points. Well, I didn't get, it was Visa, thank you. I did not get to pay it off before the credit card reported my balance change, which is normally $1,000 to $2,000 because I pay it off every month, to $30,000. That one transaction lowered my credit score 140 points. Now, I have an over 800 credit score, so it put me in a very poor range, all because I did a remodel on my house. I was able to pay it off. I had the money. I got it when I closed on the house. They paid me for it. But that's why credit scores are so bad when it comes to judging somebody and their ability to repay that loan. And so Gen Zs and millennials, they don't know the intricacies of credit score. They don't know the fact that there's no such thing as a FICO score. There are 60-something FICO scores. And which one is it when you're getting the loan? Well, if you're getting a car, it's one, a mortgage another, a general health, and then let's talk about Vantage scores. Is it Vantage 3? Is it Vantage 4? Right? That's confusing, but to say, I use relational underwriting, I actually look at this member and know this member digitally better than I ever knew them when they were just a person in my credit union, and based on that relationship, I can underwrite and do it objectively and in a safe manner. That you can do all day long.
Before I take questions, if there's questions in the audience, I have one question left for you. What's one story that would motivate the rest of us that has helped with you guys' diversity, equity, and inclusion?
I can tell you two quick, very quick stories. So I'll tell you the more recent one. We get it wrong sometimes, and we're in the same boat as many other organizations that we get conversations about diversity and inclusion really wrong. I was recently in a room with our credit team. They were saying, let's focus on building, how do we build credit to be more attractive among community organizations that maybe have always dabbled in debit, don't really talk about credit, so how do we do that? And the conversation went full throttle into more rewards, premium travel. These folks want to get rewards. You get them from Chase, you get them from these other places, and that's how you get them. And the conversation went full tilt for quite a while. And I was the only one in the room that said, I think that the segment of customers you're talking about already use credit, and you're just trying to overpay to move from column A to column B. The person that we don't have is going to maybe take one trip in their life that is a premium rewards trip. It'll be to Hawaii, not to Morocco, and it'll be for their honeymoon. So and everyone sort of sat silently back and said, you're right, we're surrounded by people that all look and act the same. We need to challenge ourselves. So we do get it wrong. Thankfully, that's in the workroom rather than the Wall Street. A second story is a personal one. It's way at the beginning. So this inspires me. It's why I came into the segment. It's why I really am passionate about what I do. So my family, I'm Cuban. My family got started in this country with a community organization. So it was a small credit union in Hialeah. Unfortunately, it's no longer around. Hialeah is a town in Miami. And they got the education on how it works in the United States. They got the small business loan when they launched a company. My dad financed his first architectural firm through the credit union. They both paid for college through the credit union. So that inspires me every day. If you ever talk to me on Zoom, and now we know everybody's living room situation, in my background, it's photos of all of them and how they got started in this country. So every single day, I wake up and am inspired by that story.
Thank you. Frank?
From the Unitas's perspective, we work really hard as far as strategically trying to fill a board position. We really take a look at, okay, we set up a matrix as far as skills and things that we want on a board, and so we really follow that. Just one quick funny story. When I was onto the board, I think I was probably about 60, 61. I was probably one of the younger people on the board. And I went over to the Vienna World Conference, and I was with another board member, and we went to this plaza that we're taking tours out of this plaza. And so I turned to this board member and I said, "Do you think that group over there is the credit union tour?" And they said, "No, too young." So I mean, we've really worked hard at it. We have 7 members on our board, 4 are women, 3 guys, 1 Chinese, 1 Hindu Indian, 1 Hispanic. We've got diversity, I think, really well, considering we're a small board. We could expand the diversity if we enlarge the board, but you want to have some flexibility as well. But that's what we do.
Seth?
So we allow members to opt in and tell their stories to us through their credit unions. And I'll share a 30-second version of Deanne's story. Deanne is a member at Washington State Employees Credit Union, had an allergic reaction to her diabetic medication, had to take an ambulance ride from Eastern Washington to Western Washington. After she got cleared from the hospital, the ambulance showed up and wanted to be paid for that ambulance ride immediately. Her response was, "I did not have the money and I did not have any family." But Washington State Employees Credit Union, through offering a loan through QCash, I was able to get the help I needed. And her words were, "The credit union was my family," right? And that resonates with me. I hope it resonates with you. Meet your members' needs because you're their family.
Thank you. Thank you. Anybody have any questions for the esteemed gentleman here? Any questions? Okay, Sue's gone. Maybe we can take a break.
I'm here. I'm here. Remember, never nobody here. So, come on. We don't have any questions. Everybody has raised their hand so far. So, Renee, since you've moderated, let me throw this back to you. Okay. What have you? We've been on a journey for a couple years, right? Do you have a story of a credit union that has taken the model, has embraced ACUC, and has seen change in their community, has brought about a difference with their members?
So I'm going to put somebody on the spot, right?
Yep.
So, Schools First Federal Credit Union, they had an issue. I got so mad. Somebody complained that they didn't have any diversity on the board. Well, Kevin Martin asked me to come out and do a little talk with Victor Coro from Coopera. And so I came out, and Kevin said, well, it would be really good for our board and our volunteers to see how we have diversity at ACUC. And so I said, okay. And I looked at the slides, and all I could do was, we have a ACUC African American Hall of Fame. And so in that African American Hall of Fame, we do have people, I like to say, my sisters and brothers of a lighter hue, not just African Americans. And so I couldn't show the pictures, so what I did was I showed the names and people who were not black, I put them in white. Well, as I turned to the next page, my board of directors were all black except for one, and he calls himself the salt and the pepper. So the same problem that Schools First was being accused of, we looked the same as well. It was reverse. So our journey as well, ACUC, we are inclusive as heck, because if the credit union system is mostly not black, then my members are mostly not black. But because we have the African American Credit Union Coalition name, it sounds as if we're exclusive. We're not. We're very inclusive. But what I learned from that, and what I loved about what Schools First did, one, in bringing Victor and I in, to make it understandable, to make you see what is the difference. And in doing so, having that conversation, reminding me, oh my God, we've got the same issues. And so now I had to go back to my board and say, guys, we are the leaders in diversity, equity, and inclusion having this conversation, but our board isn't diverse. What was great about our board, though, and the same with Schools First, is that we had diversity of thought. We had small credit unions, we had vendors, we had women, we had men. And I'm happy to say, Frank, when I came on board at AACC, when I came back to AACC in 2014, the youngest board member was 60. I'm happy to say that I have some under 40s on the board now. So that's my story, Zach.
Okay, well, I am going to thank you all very much. We appreciate your time because we're going to